Hi guys, welcome to the Umesh Shifa classes. In this video, we will discuss the subject name is Advanced Management Accounting. Advanced Management Accounting 15 marks question. Janani Company Limited is operating at 50% of capacity and manufacturing 5,000 units of a production. At 50% capacity, its cost structure is as follows. Particulars, cost per unit. Under the particulars, materials 250, cost per unit, labor 175, factory overhead 50% variables 125, cost per unit, administration's expenses 3,75,000, cost per unit is 75,000. Next 75 rupees. Selling expenses 50, total price is 675. Profit per unit is 75 rupees and selling price per unit is 750. We using this informations we prepare a flexible budget to estimate the profit at 60%, 80% and 100% working capital. Now we using this informations we prepare the flexible budget to estimate the profit at 60%, 80% and 100% working capital. At 60% capacity, the material cost increased by 5% and labor cost and selling price decreased by 2% each. B. At 80% capacity, the material cost increased by 10%, labor cost and selling price decreased by 5%. C. 100%. Capacity, the material cost increased by 5%, labor cost and selling price reduced by 8%. We using this informations we prepare the flexible budget 60%, 80% and 100% capacity. Let's take the informations and solve the question. Solutions. Initial calculation at 50% capacity 5,000 units in given in the problem given in the questions. Fixed overhead. First we calculate the fixed overhead. Fixed overhead equals to factory overhead of 50% of variable. So 50% are fixed. 50% are fixed overhead. Total factory overhead equals to 125 rupees per unit. They are given in the problem. 125 per unit equal into 5,000 units. We get the 6,25,000 rupees. Total factory overhead is 6,25,000. Next, fixed factory overhead. What are the fixed factory overhead is 6 lakh. We are taken in the example taken in the before total factory overhead. Here fixed factory overhead. Fixed factory overhead equals to 6,25,000 into 50%. 50% is fixed overhead. Now 3,12,500 remaining constant. These are the fixed factory overhead. Variable factory overhead per unit. What is the price per unit? 125 rupees units into 125 rupees per unit into 50%. 62.5 rupees per unit. Fixed administration expenses. Given in the lump sum 3,75,000 rupees. 3,75,000 rupees remaining constant. Selling expenses. Assume 100% variable based on common component is specified in the table. Selling expenses per unit is 50 rupees per unit. Other variable cost per unit. Material 250 rupees per unit. Labor 175 rupees per unit. Using the informations we prepare the other variable cost per unit. We use this formula. Particular, under that particular cost per unit at 50% capacity and nature. What is the nature of the informations is given in the problem. First on materials. Materials is cost per unit 50% capacity is 250. Nature is variables. Next labor. Labor cost per unit is 175. Variables. Nature is variable. Next factory overhead 125. 125 50% is 62.5 rupees per unit. This is the semi variables. Next administrative expenses 75 rupees. fixed. These are the administrative expenses are fixed, not variables and semi variables. They are the fixed cost. Next, selling expenses. Selling expenses is 50 rupees. Next, variables. Total cost is 675. Total cost of the this information's materials, labor, factory overhead, administrative expenses, selling expenses. Total cost is 675. Before we calculate the flexible budget 60%, 80% and 100%, we should calculate this. Calculation of 60%, 80% and 100% capacity initials. First one, initial 2. Initial 2%, initial 5%, initial 8%. The given this percentage given in the problem. In the question, they are given selling price reduced by 2% each at 60%, and it 60% to selling price reduced by 2%, and B 80% capacity selling price is 5%, and C 100% capacity selling price is 8%. We using this formula percentage, we calculate the capacity initials. First one, 750. 750, what is the 750? 750 means selling expenses. Selling expenses 750 into 2%. 750 into 1 minus 0.02. 2% means 0.02. 750 into 0.98, we get as a 734. Initial A. Next, at 60%. At 80%, we using the 5% selling expenses, reducing 5% selling expenses. 750 into 5%. 750 into 1 minus 0.5. 0.95. 1 minus 0.05, we get at the 0.95 into 750. Into 750, 712.5. In 100% capacity, 750 selling price into 8%. 750 into 1 minus 0.08. 8% we calculate as a 0.08. 1 minus 0.08 we get as a 0.92 into 750. 0.92 into 750 we get 690. And second one, variable cost initial material cost. Variable cost initial material cost. Material cost given in the problem 250, and the initial 60% 5%, under the 80% 10%, and initial 100% we get as a 5%. In the problem, they give at the 60% capacity the material cost increased to 5%. That what we take as a 5% increased. If material is 80%, we increased 10% materials, and C increased to 5%. Take it as increasing. 250 into 5%. 250 is the material cost. 250 into 1 plus 0.05. 1 plus 0.05. 1.05 into 250 we get as a 262.5. Material cost, increased material cost. A. And B, initial material cost to B 10% increased. 250 material cost into 10%. 250 into 1 plus 0.1. 1.1 into 250 we get as a 275 increased. C 5%. 250 material cost into 5%. 250 into 1 plus 0.5. 1.5 into 250 we get as a 375 rupees of the material cost. Third one, labor cost per unit calculation. Calculation of labor cost per unit. Under the given in the problem, labor cost and selling cost is decreased and material cost is increased. This is the labor cost is decreased. Initial 2%, 2%, 5% and 8%. Under the labor cost, we have 175 rupees cost per unit. 175 into 2%, 175 into 1 minus 0.02, we get as 0.98 into 175. 0.98 into 175, we get as a 171.5 cost per labor cost per unit. And 5% under the B, 175 into 5%, 175 into 1 minus 0.05, we get as 0.95 into 175, we get as a 166.25 initial B. And C, 175 into 8% reduction. 175 into 1 minus 0.08, under the 1 minus 0.08 we get as a 0.92 into 175, we get as a 161 labor cost per unit. Using this all values, we prepare flexible budget at 60%, 80% and 100%. Using this value, we prepare flexible budget for 60%, 80%, 100% working capital. We have this formula: particular basis of calculations at 60% capacity 6000 units, at 80% capacity 8000 units, at 100% capacity means 10,000 units. First one, selling price per unit. What is the selling price per unit? Initial 2%, 5% and 8%. Selling price is decreased. Under the 60% capacity, we have 375. At the 60% capacity, 600 units, we have 735 rupees, and 80% capacity, 800 units, we have 712.5 rupees, and at 100% capacity, 10,000 units, we have 690 rupees. Selling price per unit. And total sales. What are the total sales? We have the formula: units into price per units. What are the units? Units are given in the calculate in this formula. We have 6,000 units, 8,000 units and 10,000 units. Under the 60% capacity, we have 6,000 units. 6,000 units into 6,000 units into 735, we get as a 4 lakh. We get as a 44 lakh 10,000. And 80% capacity, we have 8,000 units. 8,000 units into 712.5, we get as a 57 lakhs. And 100% capacity, under the 10,000 units, we have 690 rupees cost selling price per units. 10,000 into 690, we have 69 lakh rupees. These are the total sales of 60% capacity, 80% capacities and 100% capacity. Under the variable cost, we prepare material cost per unit, labor cost per unit and factory overhead per unit. Under the material cost per unit, given in the problem, material cost is increased, not decreased. Material cost is increased. Initial 5%, 10% and 5%. Under the 60% capacity, we have 262.5 rupees cost per units. We calculate. And 8,000 units, we have 275 rupees per unit, and 10,000 units means 100% capacity, we have 262.5 rupees per unit. And labor cost is decreased. Initial 2%, 5% and 8%. Under the 60% capacity, we decreased 60% capacity 171.5 rupees labor cost per unit, and under the 80% capacity, we have 166.25 rupees labor cost per unit, and 100% capacity, we have 161 rupees labor cost per unit. Under the factory overhead is fixed. Any problem, we take it as a factory overhead is fixed. Under the 62.5 rupees, factory overhead is 50%, the 62.5 rupees per unit. Under the 60%, we have 62.5% and 80% 62.5%, and 100% also we have factory overhead per cost per unit is 62.5 rupees per unit. Selling expenses per unit is 50 rupees. 50 rupees, and 60% capacity, we have 50 rupees. 80% capacity, we have 50 rupees, and 100% capacity, we have 50 rupees. All the total of variable cost. Sum of variable cost. All the total of sum of variable cost. They are the 262.5, 171.5, 62.5 and 50 rupees. The variable cost is 600 units, 800 units and 10,000 units. we taking the material cost, labor cost, and fixed overhead cost per unit, and the units we have totally sum of above 32,79,000 at 60% capacity, and 80% capacity we have 44,30,000 total sum of, and under the 100% capacity we have variable cost. Total variable cost is 53,60,000. These are the total variable cost. Fixed cost we calculate. Now we have calculate to fixed cost. Factory overhead is factory overhead we calculate the cost per unit. Factory overhead calculating formula is, we have the 125 we have the 5,000 units. Factory overhead cost per unit is 125 rupees per unit. Under 125 rupees per units we have 6,25,000 rupees, and is called as a total factory overhead. Under the total factory overhead we have fixed factory overhead, and 50% fixed factory overhead into 50%. 3,12,500. 3,12,500 is called as a factory overhead. Factory overhead is the 50% and applicable to all equally. Here factory overhead 3,12,500 rupees and 3,12,500 at 60% capacity, 3,12,500 at 80% capacity, 3,12,500 at 100% capacity. Now administrative expenses. Under the administrative expenses, in this amount is given in the problem. Lump sum 3,75,000 rupees and 3,75,000 at 60% capacity. At 80% capacity we have 3,75,000 administrative expenses, and 100% capacity also we have 3,75,000 administrative expenses. Total of the fixed cost, sum of the total we have 6,87,500. Total of the factory overhead and administrative overhead we have 6,87,500, and it is 60% capacity. At 80% capacity 3,12,500 plus 3,75,000 we have a 6,87,500. Under the 100% capacity 3,12,500 plus 3,75,000 we have 6,87,500 total fixed cost. And after the total fixed cost we total cost we calculate total cost. What is the total cost? Total cost means variable cost plus fixed cost. Variable cost calculated in the before, the total variable cost here also. Total variable cost is 32,79,000 at 60% capacity, 44,30,000 at 80% capacity, 53,60,000 at 100% capacity. Total cost, variable cost plus fixed cost, we have 39,66,500 at 60% capacity, 5,51,17,500 at 80% capacity, 60,47,500 at 100% capacity. Total of this we calculate profit. Profit means sales minus total cost. That we take it as a profit. Profit, what do you mean by profit? Profit means sales minus total cost is called as a profit. What is the profit we have? 60%, 80% and 100% capacity. What is the profit we have? Under the calculation of profit formula, we have sales. We have calculate before we calculate the profit, we know the what is the sales, what is the 60%, 80% and 100% sales. We calculate the total sales. Here total sales 6,000 units at 60% we have 735, we have 44,10,000 and 80% capacity 8,000 units into 712.5 we have 57 lakhs and 100% capacity 10,000 units into 690 we have 69 lakhs. Using of those sales value, total sales minus the sales minus total cost. What is the total cost? Sales are given, total cost. Under the sales and total cost, when we minus that value, we have profit. Profit is at the 60% capacity, we have 4,43,500, and 80% capacity we have 5,82,500, and 100% capacity profit we have 8,52,500. Under the 60% capacity we have 4,43,500, and 60% capacity 80% capacity we have 5,82,500, and 100% capacity we have 8,52,500. This is the formula. This is the correct method to calculate the profit. Flexible budget at 60%, 80% and 100%. Thank you.